Good morning, ladies and gentlemen. My name is Simon Mills. I'm a Senior Associate at the Zien Group, and I'd like to welcome you all to today's FS Club webinar, where we're going to be discussing how can we use technology and finance to improve society and the planet. Now, I'm privileged to be joined by Chris Skinner, who is known as one of the most influential people in technology and as a best-selling author. His latest book, which is in fact his 17th, is Digital for Good, and focuses on how technology and finance can work together to address environmental and social issues. Now, as always, the agenda for this webinar is very simple. Following my introduction, our speaker is going to make his presentation, and then we're going to move on to the Q&A discussion. Now, I'm afraid that you are all muted, but you are able to submit your questions to Chris through the chat tool, which is on the right-hand side of your screen. Do chip in at any point of the proceedings. I'm going to be collating your questions, and I'll put them to Chris at the end. Now, as with all of our FS Club webinars, we're going to be recording this session, and you're going to be able to access Chris's slides and presentation at a later date. Before we move on, I really must thank FS Club members who've opened up our webinar series to the public. With their help, since March of 2020, we've held over 300 of these events on topics as diverse as money laundering, the metaverse, and high salinity agriculture. The FS Club is the premier global executive knowledge network for technology and finance, where members and their guests can meet over a glass of wine to debate key issues which impact on the financial services, technology, and society. It's very much like a 21st century version of the city's 17th century coffee houses. And so, without further ado, I would like to introduce today's speaker. Chris, tell us about how we can use technology and finance to improve society and the planet.
Thank you, Simon. And I just need to share my screen, which hopefully you can see now.
Yep, we've got it.
Just make sure, am I showing the right screen? I'm just going to check. Yep,
we can see you there.
You got the right screen. So, hello everyone, and it's a while since I've engaged in the Financial Services Club because of the pandemic. So it's nice to have you all here today and to re-engage. And thank you to Michael, Peter, and Simon and the team for inviting me along. Obviously, there's so many things we could talk about, particularly as you mentioned, when you've written 17 books. In fact, it's 22 if you include my children's books. In that I wrote 5 books during the pandemic for young people, because I've got 2 little boys who are twins, 6 years old. I'm a kind of old dad, and I guess during the last 3 years it's been very difficult to work out what's happening in the world, because we've got a pandemic that shut everything down, followed by a war that you may have thought wouldn't affect you, but it's affected all of us in different ways, particularly as I live in Poland. So I'm right next door to Ukraine and have a lot of Ukrainian friends and a lot of Russian friends. It's been strange times, and it kind of, during that period since the pandemic started and having my little boys and then the war, made me just start to question everything. I've been doing this for quite a while, because as someone focused on where's the world going, I'm trying to make sense of where the world is now and how it's changing, and that's what my focus is in all of my work. And for some time I've said that when you look at cryptocurrencies, for example, they don't recognize the borders of countries. And I was doing presentations in the Middle East, including Iran, some years ago, and I said to the Iranians, you should be trading in Bitcoin because you're off the SWIFT network. I don't know whether they ever did, but when you think about that statement, it's basically that Bitcoin and cryptocurrencies do not recognize countries. They recognize the power of the network and the governance of the citizens on the network, rather than those within countries. When we saw the Arab Spring, which some of you may remember from quite a while ago, social media drove a huge amount of capability for people to rise up and revolt against their governments, because governments created borders that actually don't exist. We just created them out of our heads and through contracts and currencies and structures that are controlled by governments. But then it gets even weirder, because Albert Einstein said time doesn't exist. We just invented it. And I hadn't thought about that until I saw this quote from Albert Einstein. And then I was thinking, well, he's right. Why is the time in Britain 1 hour behind the time in Warsaw? And why is America so far behind the time in Asia? Now, obviously, it's so we can delineate and support our borders and our contracts and structures. And in fact, I'm just talking to a company this week who talk about time as a service, which is nanosecond microstamping transactions in financial markets. So time is important, but it doesn't exist. Companies don't exist. Your company is just made up, and it's enforced by laws which we just made up. And therefore, just to add to that quandary, money doesn't exist. We just invented money because of borders and contracts and governments and structures. In that, when you think about the US dollar being the predominant currency of the world because America is the superpower, we could just as easily replace that tomorrow with the renminbi, or yuan, if you would prefer to say it that way. Although Juan dollar sounds Spanish to me. What it's done for me, the pandemic and the lockdown and the war in Ukraine, it's just made me realize that we have to think about our world in a different way, and that everything that you grew up with and the norms that you think about really don't exist. You need to think different. You need to break out of these old mentalities. And that's actually been very true in the last decade of the rise of FinTech and digital transformation of the network. And so that's what I'm going to really talk about today, which is, first of all, the rise of technology in finance and how it's been integrated to create this amazing FinTech community that has been absolutely explosive in the last decade. Right now, it's going through a bit of a change. And then talk about what that means to traditional financial firms and how they have to change. And then finishing with what that means in the next decade. So I'll start with the whole nature of FinTech, which is almost every FinTech firm I've met, although they're getting older now, were very young people, whereas every bank that I met, including now, are not so young. If I walk into a bank boardroom, I tend to find a group of people who look like this. You may even recognize some of those individuals. Whereas when I walk into a FinTech boardroom, it's more like this. It's very different. And that's because technology is embryonic and growing, whereas finance is old. And finance needs to have stability and security and resilience, whereas technology is disruptive and wants to change everything. And there's lessons learned on both sides. But what we've actually had in the last decade is the combination of the two, where thousands of startups have suddenly appeared across the planet. I'm amazed at what's happening in India, in Brazil, across Asia, in China in particular, because their ideas are radically different to those that we have in Europe and America. And it's reinventing the whole nature of how we think about money, finance, payments, investments, savings, loans. Everything is changing really, really quickly. And to put it in context, some friends of mine based in Canary Wharf, CFTE, produced a report last year looking at how the financial markets have changed in the last 10 years. And FinTech would have been classified as about 3% of the value of financial firms in 2010, rising to 38% of the value of the global market of financial firms in 2021. And so we can't dismiss this, even though FinTech is challenged today. But what we need to do is to understand how FinTech is changing every part of financial markets. And for me, contextually, again, I tend to think of it that any process that can be wrapped up into an API and then launched into open banking platforms as part of the ecosystem of banking as a service is going to have great potential to succeed. And we've seen this in every niche market area of financial services and insurance. And if I pick on a couple of insurance examples, just because that's where I started my career, Lemonade is a fantastic AI system that can pay claims in real time near enough, because they know the validity of the content provided by the customer. Trov can provide real-time insurances on the fly, which you don't need to actually spend time taking out annual policies. And that's why a critical thing for me about FinTech is it's real time. The only reason we had annual insurances and annuitized products is because we couldn't afford to have the customer banging on the door more than once a year. That's changed because the customer can do it themselves using their laptop and tablet and phone. I love the example I had from Rich Council, and I interviewed Rich last year for my blog, thefinancer.com. And what I loved about talking to him is he grew up on a farm in Somerset, and he didn't want to be a farmer, so he ended up moving into financial services in the City of London, dealing with hedge investment products. And during his time in the city, thought to himself, why is it that my dad, as a farmer, can't hedge his crops from crop failure? And as a result, he left the city, he went back to the farm, and he created in the barn of his father's farm stable. And this is now a FinTech unicorn. And it basically is the idea of every single agricultural product should have access to hedging the likelihood of crop failure and the investment services therein at a swipe on an app. So it's not complicated, it's really simple. And that's what really gets me about financial services. We've made it complicated. It is simple. Take a look at Stripe, and you probably all know Stripe. If you don't, Patrick and John Collison created the company in 2010 when they were 21 and 19 years old. By 2016, they had a almost $10 billion company with a few hundred people. 2 years later, they doubled the value of the company. Another year later, they almost doubled it again. Another year later, in fact, 2021, $95 billion for a company that was just over 10 years old, because they had this fantastic solution for enabling merchants and people who are trying to provide online services and apps to take a payment simply and easily. And it's just 7 lines of code in an API, an application program interface. I love Stripe. I think they're an amazing example of what FinTech is really all about, and they're the biggest value company in that market. Having said that, their valuation has come down in the last year. Today, I think they're about to go to IPO during the course of this year, maybe $70–75 billion, because the markets have contracted. But even so, a fantastic example of a hugely successful company, which when you compare how they're valued to the banks, Commerce Bank, which is a bank I massively respect and have done for many years, is worth just a tenth or thereabouts of Stripe, and yet they've been around for over 100 years. Same with Deutsche Bank. Stripe is more than 3 Deutsche Banks, or BBVA, who is the poster child of traditional financial firms in FinTech, worth less than half a Stripe. And same with ING. So the world has massively moved on and changed, and we need to think about what that means to our organizations and to the future, which is what I spend all my time thinking about. Having said that, and some of you probably are aware, 2022 was a FinTech bloodbath, and this is a death metal band bloodbath. But I like this picture because I think this is how I felt FinTech was last year. Everything started to go wrong, and a lot of companies have seen the reckoning. They're being bought by banks, or they're trying desperately to be working with the banks, getting investment from the banks, because their runway of capital is running out very quickly. And then we saw the massive bloodbath in cryptocurrency in particular, with all of the issues with Sam Bankman-Fried and Terra Luna. But that's not new. That's been going on for quite a while. But what made me laugh is that in the cryptocurrency markets that were worth more than $1 trillion at the beginning of 2022 is now saying maybe we need to regulate this. And it's like, why didn't you do that before? You know, banks don't ask for the regulations that they have to comply with. They're there for a reason, which goes back to the old market has to have resilience, stability, and security, and the new market may want to disrupt it and change it, but you can't do that without keeping the resilience and security. So looking forward over the next year, there's some interesting things happening. We're still seeing a lot of investment in fintech firms, and we're seeing actually quite a bit of the cryptocurrency markets coming back. The loose players like FTX are going to leave that market, and I wrote a blog the other day saying that what doesn't kill me makes me stronger, and I think this is true of both the fintech market and the cryptocurrency market, that the players left at the end of this bloodbath will be much stronger and more resilient and reliable and secure, and therefore we will see the new market players really playing out into a new market structure, a little bit like the internet boom and bust of 1999-2000, when we saw a lot of people even questioning, for example, would Amazon survive? And now, obviously, we know different. Amazon didn't just survive, they thrived. And we're going to see that in fintech and crypto over the next year. I was amused the other day, for example, that Bob Diamond, the former chief executive of Barclays Bank, was saying it's absolutely stupid if you don't realize that there will be a digital dollar for institutional and corporate investors, and to use that in real time globally across the world. But is it a digital dollar or digital yuan or digital euro or digital pound, or is it all of those, or is it a basket of those, or is it Bitcoin or Ether or something else? Which kind of brings me around to talking briefly about digital transformation in the banks themselves. And a lot of other people in my industry talk about incumbents, and I don't like the word incumbent. I prefer to say traditional finance, or TradFi if you prefer. And traditional finance is something that I spent the last decade writing about and advising about, to say, how can you digitalize what you do? And very simply, how can you digitalize what you do is to take the old idea of a front, middle, and back office, where the front office is face-to-face with humans in a building or a branch, linked through infrastructure that's highly costly capital infrastructure, to a back office headquarters of those who develop the infrastructure and serve the entity, to a new model of the front offices now connecting devices in the Internet of Things, linked through a middle office that's completely open as an ecosystem of apps and APIs, to a back office that's all about the data and the intelligence about that data. I continually say to traditional financial firms that their biggest issue is they're not very good in the apps and APIs, and they have all the data, but they haven't actually leveraged the data they've got, and that's actually the jewel in their crown. This is illustrated to me very easily by when I did a lot of work with Ant Financial Group, or Ant Group as they're known now, who support Alibaba in China. And they have this chart of their business model, which to me is exactly what I've just described, but I was describing this way before I saw this slide, so it's not stolen. But at the front office, they have their super app that mixes commercial service and entertainment services. So imagine if Amazon, Netflix, and PayPal were integrated. That's their front office. In the middle office, they have the Alibaba Cloud, which connects everything to their back office services, which is all about digital marketing and data and payments and finance. But specifically in this slide, if you look in the middle of the bottom 3 layers, they have a company called Ali Mama, which is because Mama looks after Baba. You know, Ali Mama is the data. That's the jewel in the crown. And that's what banks have right now, the traditional financial institutions have right now. But they're letting it gradually waste away because they haven't got the apps and the APIs and the open ecosystem and the partnering and the FinTech workers together. In fact, during the pandemic, I very quickly realized that the model I'm describing is, imagine if your office was on Mars and your employees were on the moon and your customers were on Earth. That's the model we need. And that's what that open ecosystem demonstrates, that you can do everything digitally, because in the pandemic, we didn't meet each other face to face at all for over 2 years. And the problem banks have, traditional financial firms have, is that they've stitched together a lot of old systems where they don't have that data analysis that I'm describing. I call them Bankensteins. You know, it's Bankenstein's monster, because basically everything is separated, everything is not leveraged properly. You can't be artificially intelligent if you're done with data. And in talking to a lot of the institutions about digital transformation, I discovered most banks are taking at least 3 to 5 years to get to implementation of digital transformation, because they have to work out what to do, how to do it, then do it, and then do it better forever. And that takes an awful lot of time. Most of the banks I met were looking at the big tech giants and trying to copy their structures and how they work. They then create some vision and platform that's burning to take them forward. They then try and make sure that they include everybody and reskill everybody in the process. And these things are not easy. But at the end of it, and this was a critical comment that actually came from DBS in Singapore, is the data, because the data is the air that we breathe. And the better the air that you breathe, the more it's rationalized, consolidated, and structured. So you have leverage around the customer relationship through the data into the apps and APIs, the more likely you will be to survive healthily. I realize I'm talking quickly because I'm coming to the end and wanted to leave time for questions, but you're probably wondering what's next. And you know, we talk a lot about the things that are next, like the metaverse and artificial reality, 5G and how that will change things, quantum computing. And these are all well and good, but these are enablers. These are things that we should probably talk about when they're ready. And right now, for example, Facebook, which is now Meta, has a metaverse virtual reality where you don't even have legs. Has it got the legs to run? And is it the right one to take your bet on? I think I'm going to hold fire and wait on that one. Similarly with the cryptocurrency markets, my theme at the moment is very much looking at, do we need centralized finance or can we have decentralized finance? And my view is we need both. We need hi-fi, hybrid finance, where we can decentralize control and ownership to the individual on the network, but with centralized regulatory oversight to ensure another Sam Bankman-Fried, Bankman, anyway, whoever he is, doesn't appear again. And then I think we need to take a macro view, and this is what is meant to be the whole reason why I'm making this presentation, which is how can finance and technology do good for society and good for the planet? And I've been working on this for quite a while. The newest book, Digital for Good, is all about this subject, and it incorporates the themes of ESG, environmental social governance, but I don't like that acronym that much. I'd prefer to say, my drive is, I hate the fact that we're destroying biodiversity. I don't care about climate change. I care about the habitats of our animals, like the orangutan that I had in this picture just before. We've destroyed more than half of the habitats of these animals in the last 50 years, and we're losing an awful lot of our native inhabitants who should be alongside us, not destroyed by us. And so when I look at the fintech world, I find an awful lot of the fintech world is creating innovation to use technology and finance to make the world a better place. And I've picked out a few examples here. You can find them on my blog, and I can give you the links if you're interested. But it's not just 6 companies. There's actually a whole system of companies that are thinking about how can we use apps, APIs, and data to make the world a better place, and use finance in the context of this to make the world a better place. It's finance with purpose. If you remember 2008 and the financial crisis implosion on September the 14th, 15th, with Lehman's collapse, and what happened after that, my abiding memory was Lord Adair Turner, who was then chair of the Financial Services Authority, saying a lot of banks are socially useless and have lost their moral compass. The technology and fintech community are trying to rediscover the moral compass and being socially useful in finance. Because at the end of the day, how do you price an extinction? I talk a lot to Extinction Rebellion and their groups as activists to consumers, but there's also a huge number now of activist investors, from pension funds to the institutional investment community. And are we going to be the first species that wipes ourselves out because it wasn't cost effective? I'll be interested in your views.
Chris, that was an absolutely fascinating talk. We have got a huge number of questions from our audience, and I will apologise in advance if we don't get round to your question. We will put them all to Chris, and I'm sure we can get them answered in due course. Now, as chairman, the privilege of the first question falls to me. And I'd just like to ask you about cryptocurrencies, Chris. The environmental impact of cryptocurrencies such as Bitcoin, they're really well documented. How can we actually address this?
Well, there's a big debate in the crypto community around that very question, because the Bitcoin libertarian group are saying it will sort itself out, but it hasn't sorted itself out so far. And then Ethereum did a major change last year in what they called the merge, and they moved from what's called proof of work to proof of stake. And the difference is, proof of work is you have to use computing power to prove that you have solved a mathematical question around the issuance of the next coin, which is getting slower and slower. And the Bitcoin mining community is using more and more computing power to try and solve the mathematical promise to issue the next coin, of which there'll be 21 million eventually, but that's probably around 2040. Whereas Ethereum's gone the other way and said, no, we'll do proof of stake, which is you have to show you're good for the money behind your coin, and then you can issue it, as in you put proof of capital on the network. And that's actually radically reduced the compute power required, and therefore the environmental issues in Ethereum, such that now I just blogged about this today, in fact, showing that Ethereum is now down to almost zero in environmental damage because of moving to proof of stake. The problem with proof of stake is it plays into more centralized control structures between governments and businesses and banks than the libertarian view of the world, which is we want everything to be decentralized and to get rid of governments and banks. The thing is, if you trash governments and banks and kill the planet, then that's not a particularly effective way of doing it.
Fantastic. Right. Now, do you think that fintech liquidity providers like Janet Street are going to be important in helping finance transition to more sustainable models?
I mean, there's definitely a movement amongst the private equity, venture capital, and investment and institutional investment communities to favour those companies that have sustainable models of finance. And that's not just saying it's going to be environmentally friendly, it's saying it's got to be good on all three fronts: environmental, social, and governance. In fact, I was quite interested because Standard & Poor's have just launched an ESG 300 about 6 months ago, which, if you didn't see it, it's basically rating all the companies as to how appropriate they are on the scorecard of sustainability. And Exxon appears on the list, whereas Tesla does not. And Elon Musk had a huge hissy fit on Twitter about it, being Mr. Tweet. But they said, look, from your environmental aspect of an electric car production company, big tick in the box. But you have racial issues and internal social and governmental issues that you're failing dramatically upon, and that's why you got knocked off the list. So it's a balance, and that's going to be another interesting space to watch.
Now, we've got a question here about the G in ESG. How can we actually trust new fintech companies given the problems and losses that they've incurred over the last 18 months?
Well, I mean, I mentioned Stripe, valuation going down, and we've seen the same with Revolut, Monzo, and most of the challenger banks and the companies that are in that space, because it's not a fintech bust after a boom. It's more of a reset to say, how many of these companies really have a good business model and a good leadership team? And I often point to Starling Bank, for example, and say, whatever you think about Anne Boden, the fact that she is a seasoned financial person in these markets and knows what's going to happen when you hit at the skids, which we just have, you'll see a much more robust handling, I think, of that sort of company than the new kids on the block who have never been through a recession. And the recession is going to be good for a lot of banks because they can buy and attract a lot of talent that they couldn't in the last decade.
To what extent do you think finance for good requires universally held values? Do you think there should be something like the 5 capitals model, Jonathan Porritt's 5 capitals model, adopted by fintech firms who are attempting to address this space?
No, because not everyone will sign up for those ideas. Like the United Nations launched a campaign for responsible banking in 2018-19. Jamie Dimon led a call for stakeholder capitalism at the end of 2019, and then you get blown away by the pandemic and wars. And in fact, what I actually have been saying recently is it's disappointing for me personally that we've moved from globalization and harmonization to localization and isolation. I think we've moved a lot more towards domestic, national approaches, and Brexit's a good example of that. For example, that we've moved away from trying to harmonize and globalize, which is disappointing because I would love to see a world that could all work together as one, but that's what John Lennon said. Imagine it's not going to happen.
Going back to one of your first slides where you were saying, what people think I am versus what I really am. How do you think this relates to banks? How would you actually frame banks within that model?
Well, what you end up with most banks is concentration, systemically important financial institutions. And if you're not one of those, then you're on the fringe. You might end up being a community or mutual bank. And basically, the bigger the bank is, the more likely it is that it can control governments because of the fact that the government depends on a systemically important financial institution to not fail, too big to fail. We all thought that that would change after 2008. Actually, most of the big banks in the world have got a lot bigger since 2008. And I always remember Liz Warren saying in a meeting I had in the USA that Jamie Dimon personally was ringing up all the senators in the White House and Congress and the Senate and saying, if you vote through these changes in the banking laws, then I'll make it very hard for you. Something like that. I'm sure he wasn't, Don Corleone, but it sounded like that. And that's the issue we have, that when you have very large banks controlling through concentration most of the economy and the governmental viability, then that makes it very difficult to get a conscientious world. Having said that, HSBC have just recently, through pressure from Extinction Rebellion, vowed to give no more funding to new fossil fuel projects. So things do change.
Absolutely. How do you think America's rollout of FedNow is going to change the prospects for cross-border payments through supply chains?
I don't know. I like the idea of FedNow, but when I was covering a survey the other day from my friend Gareth Lodge about ISO 20022, which is now, in my view, 20023, or it could be 20025 or 2040 or whatever it's going to come in. Most American banks weren't ready to implement those standards, and so you can have things like FedNow and ISO 20022, but if the banks can't be bothered implementing them, what's the point?
Given that kind of sclerotic approach to change, what role do you think the American dollar is going to play in global trade come 2030?
Well, the thing about the US dollar is that, and I've traveled a lot pre-pandemic, not so much post-pandemic, but whatever country you go to, typically the dollar is the most accepted currency in the world, and the most respected as a global currency. I guess because of the superpower status of America and the fact that America's not going to go away, it's quite resilient and reliable. But I do have this idea that by 2030, particularly as we move to central bank digital currencies, that we'll have a digital basket of currencies that might be even wrapped up in a cryptocurrency backed by CBDCs, that's taking the Chinese and the European and maybe even some of the other Asian, African and South American currencies into that basket. So it's not just the US dollar. The question that would then raise, however, is, does that challenge the status of the USA over the next decade? And I think there is a challenge. Most empires do end. The Romans did, the British Empire did. The American Empire is reaching a bit of an impasse, maybe surpassed by the Chinese. Who knows?
It could be here. Right, now we've got an interesting question here on digital identity. I know that a lot of progress has been made in the fintech space, but there still isn't a universally recognized push towards digital identity. Firstly, how important do you think digital identity is? And secondly, are there any interesting developments in this space?
Well, digital identity is incredibly important if we could make it work, because it would allow us to avoid a lot of the scams and criminal fraternity that exist out there. At the moment, everyone has different numbers, but let's say $2 or $3 trillion worth of money laundering goes through the financial system every year, maybe more, maybe less. And a lot of that's down to false actors. And the issue that the banks have is, how do you prove that they're a false actor? Because you then get a lot of false positives and false negatives, and it's very difficult to create the right system. And I always remember some of my friends in the banks who deal with fraud and money laundering, criminal activity, saying, we just want to make sure it's at a certain percentage, and as long as it's below that percentage, then we're comfortable. Difficult. if we had a digital identity that really worked, then you could probably get rid of a lot of the false positives, false negatives. You'd have a far more effective system. But the problem with digital identity is I don't think you'll ever have one that works globally. You might have one for USA, one for Canada, one for the European Union, which would not include the Nordics or the UK, etc., etc. There's a very good range of digital identity schemes in the Nordic region, and I spent a lot of time in Sweden, Finland, and Norway, and Denmark, and Iceland. They've got great schemes, but they haven't harmonized them to be interoperable. And then how can they be interoperable with other schemes? So I love the concept of digital identity. I'm just not sure how we'll ever make it happen. But the best one right now is in India.
Presumably, Estonian digital citizenship is a pretty good standard as well, but it requires the integration across all government services. So, you know, education and health and everything else need to be linked in, and presumably that's what's holding back some of the progress in digital identity.
Yeah, I've got my e-residency, and I love the idea that Estonia is a country that can run on a USB stick, or these days, obviously, or both. Backup services. My disaster recovery is my USB stick. But again, what they've created, it hasn't transported.
On the subject of small countries and developing countries, should central banks and the banks in those countries look to digitize their fiat currency in order to avoid being dollarized or yuanized?
That's kind of a good question. I think you have to raise the alternative view as how important is a national currency to the country. I mean, again, I'm feeling a little bit, I won't say disillusioned, but sort of sad that I think we'll lose a lot of physical currencies over the next decade. And I've collected banknotes for the last 20 years. So, you know, I love a physical note. And when you look at a physical note, it shows the culture and the history of that country, or the landscape and the landmarks of that country more often than not. And so to lose that physicality in digitalization is concerning. But I think a lot of countries, unless they're of the right size, will find that they'll have to move to currency unions. You know, we've had a long discussion around the Gulf region having a currency union, around Africa having a currency union, across the African nations, around Asia. You know, so we might see the rise of a lot more sort of regional digital coin structures than we expected.
I mean, one of the things that concerns me about digital fiat currencies is the potential for, you know, a panopticon society. So, you know, you will be able to see exactly how somebody is spending their money and what donations they're making to charities or political parties or whatever. I mean, the data is going to reside somewhere. How can we avoid that being misused?
Again, challenging question, because in China, the social credit score system and what was rising out of the FinTech community there, and the fact that the government's People's Republic of China has taken far more of an assertive controlling aspect over Ant Group, Alibaba, and Tencent, WeChat, you know, makes you realize that they want to have that data analytics of citizens' movements. On the one hand, I guess you could say if you've got centralized services, then centralized control will take over. But on the other hand, Tim Berners-Lee and an awful lot of other people are desperately trying to create a decentralized network where the internet, the part you use, is owned by you. And I often go back to Dave Birch, who's one of my friends in the digital identity area in particular, and his idea is, you know, when you have a decentralized network where you own that piece, then you can release personas and anonymized data that's encrypted around your activities, but the government would never have oversight and control of your activities.
Excellent. Now, I am afraid that time has caught up with us, ladies and gentlemen. I know that some of you still got questions to ask. Please do email us and we'll pass them on to Chris to continue the discussion. We're also going to be posting a recording of this presentation online in the next couple of days, so you can revisit what Chris has said. It just remains for me to thank members of the FS Club for making today possible. I'd also urge you to keep an eye on our forthcoming events page for more webinars, which include Don't Panic, Can We Help People Survive in Emergencies, Sanctions and the Dollar, the Cairo, Geniza and Medieval Global Trade, and the Currency of Politics, Political Theory of Money from Aristotle to Keynes. You can catch up with all our previous webinars on YouTube or our new Pizzazz TV channel, and we hope to see you again soon. Thank you very much for joining us, and goodbye.